I'm here today with Jamie Nicol from Dalton Nicol Reid, portfolio managers here in Brisbane. We've worked with Dalton Nicol Reid over the last 10 years, who have exclusively managed our clients' investment portfolios. So we thought that it would be a great idea for us to introduce you to Jamie today, and so you can hear straight from the horse's mouth around how they are different and why we here at FWO use Dalton Nicol Reid as our clients' investment managers. Hi Jamie, and thanks for joining us.
Thanks.
So tell us about Dalton Nicol Reid. Who are you?
Well, we've been around since 2001, based here in Brisbane, as you mentioned. We have about 20 staff and look after around about 750 million worth of funds on behalf of charities, high net worth individuals. And our focus is just on finding good quality investments and looking after clients' funds in a sensible manner.
Yep. So can you tell us about Dalton Nicol Reid's investment philosophy?
Well, the core philosophy is about focusing on finding those high quality investments at an attractive valuation and having a high concentration. So having around 20 odd stocks in the portfolio at any one time. The idea of that is that you can generate good returns for clients while still spreading your risks enough to generate to not take on too much risk. Now, by focusing on quality, a lot of people ask, well, what does that mean? And for us, it's a range of factors. It means things such as a good industry structure that the company's operating in, strong earnings strength, good balance sheet, good management, and a low and not too many risks from an environmental or governance type perspective. Now, these type of companies often trade at very big premiums in the market, so we're trying to get them when they're out of favour. And for us, that means looking for stocks which perhaps have got improving quality characteristics, or perhaps the market's just missing the sustainability of their profits. If you've got a very good company, they can often reinvest in themselves to maintain their profits for quite a period of time. So we find opportunities in those areas and really stick to those core areas and maintain some discipline around that.
Great. And Dalton Nicol Reid's investment process, can you just give us a little bit of an insight around how you and your team determine which stocks to buy? What's your process of research and decision making?
Well, it's really a four-step process, and the first step is finding the idea. And we have a range of quantitative databases that looks through the market, looking for identifying companies which perhaps are reasonable value or perhaps have got those improving quality characteristics that we mentioned. Having identified a potential opportunity, then we've got to do the next layer of work. And the first layer of work is identifying that the company does meet what we consider to be those quality characteristics. Yep. And we go through what we call the Dalton Nicol Reid Quality Web, which is going through those key points that I mentioned, looking at the industry structure, having a keen debate around the sustainability of the industry that the company's operating in, looking at a quantitative data around the earnings strength, looking at how good the profit is, the improvement that's happening in their returns and margins, looking at the strength of the balance sheet, and a fairly robust discussion around the strengths of the management. And if a company meets our definition of quality, then we do a much more detailed valuation work, which is where we speak to management, we do a detailed financial model of the company, try to understand the earnings drivers, and where we might differ from what the market's expecting the company's profits to be. And that's where we find most of the best ideas, is where we form a little bit of a different view to the market by going out, speaking to the company, speaking to their competitors, and just getting a good understanding of those key earnings drivers. Yeah. And then we put together the portfolio sensibly. You don't want to take on too much risk in any one sector. You want to get a good amount of diversity, but looking to concentrate your investments in your best ideas.
Yeah. I think, Jamie, really good evidence of that investment process and the success of that was throughout the last 5 years with the global financial crisis and the impact that had on equity markets. And when we first started working with you guys nearly 10 years ago, the pieces of your investment process that really stuck out for us was your focus around preservation of capital, and for our clients, whilst there was a loss in value during that time, the speed at which our clients' portfolios recovered without really losing any of those core investments was quite outstanding. So for us, it was that was a great testament, I think, to the strength of your investment process.
Yeah, thanks. So, I think the focus on quality definitely helps in that regards, because the best quality companies were the first to recover.
Yeah.
And often during a bit of instability, some great opportunities get thrown up. But also, I think it reflects the fact that we're investing alongside our clients, and so it's our money at risk as well as clients. So obviously, you're managing that money as if it's your own, because it is. And I think sometimes with some of the major funds, they're a little bit removed from the end client's fund, so you can get a little bit higher risk tolerance from the fund manager, and that's not always healthy.
Yeah. So, in terms of the different investment options that Dalton Nicol Reid provides to our clients, can you just give us a bit of an overview of those, specifically in terms of matching clients' portfolios to their goals and their attitudes to risk?
Well, clearly you'll know your clients best and can match up the risk profiles which best suit the clients. But in terms of the major portfolios across Australian equities, our major oldest portfolio is our high conviction portfolio, which is where we focus on trying to find good quality companies which are growing. But we also get clients who are ethically focused, charity groups and the like, who might be more concerned about some environmental, social issues, and so we have a socially responsible portfolio that can address that. And then there's also clients that might be in a pension phase and looking for a higher level of income. And our income portfolio is really designed for clients to focus on living within the income that the portfolio generates, and then our job is to make sure we try to grow that income. And there'll be capital volatility from time to time, but so long as we focus on trying to find those companies with good sustainable income dividend yields, then that can suit those clients in the pension phase.
And Jamie, you also invest in other asset classes other than pure Australian equities and international equities. Can you just tell us a little bit about property and fixed interest as well?
Yeah, so clients in that who might be more looking at a balanced type portfolio, they're likely to have a mixture of Aussie equities, fixed interest, property and international. And that gives you that extra diversity and smooths out the volatility that can occur with equities, which is probably the highest risk class. Looking at fixed interest, we've found some really good opportunities in the fixed interest area, and that was another one of those areas that did experience a little bit of volatility through the GFC. And there was, if you're focusing on the same sort of risk parameters, looking at good quality companies that perhaps issue debt, and you can find some mispriced opportunities in the market, then you can pick up extra return for clients up above and beyond sort of the TD type rates that are available. And that helps to smooth out. That'll be a much more consistent return than in equities, although not as high you wouldn't expect through the cycle. Then we also look at property trusts, which have probably slightly higher risk than fixed interest, but not as high as equities. Again, you'd expect them to grow a little slower than equities through the cycle, but with a fairly strong dividend yield. And again, we try to find good quality property and assets that have got a very enduring yield, and try to avoid highly speculative property or development type assets, which isn't really what we're looking to do with that portfolio.
So Jamie, over the last 10 years, Dalton Nicol Reid has an outstanding track record in terms of performance. What do you think would be the main drivers to that performance?
Yeah, we think there's a few main factors. The first one, as I mentioned, is we're investing alongside our clients. So there's good alignment with the investment team, with the end investor. So we think that's very important. The second thing is just a really efficient process. So that focus on buying quality companies at attractive valuations means we know what it is we like. We don't spend a lot of wasted time focusing on areas which don't add much value to the end client. The third thing is we've got good accountability within our processes, and we have an investment committee that meets on a monthly basis that's chaired by Justine Hickey, who used to be head of equities for Suncorp. She's an independent committee member, and we find that keeps us all accountable, including myself as head of equities. I need to report into her, and I think that shows good discipline to the rest of the team, and we think that's been very important as well.
So, Jamie, what do you think it is that clients enjoy most about Dalton Nicol Reid's investment approach, and specifically around the use of managed discretionary account solution? Maybe just give us a little bit of an overview around how an MDA works and why that's suitable for investors.
Well, the motivation for having a managed discretionary account is that we think clients like a bit of control, like to be able to see what it is that they're investing in, and we think that's crucially important. It's that transparency, understanding what's actually going on inside your portfolio. The second thing is the fact that it is portable. Clients can pick it up, and if they don't like what we're doing, they're seeing what we're doing, they can just pick it up and take it to a stockbroker or someone else. The underlying assets are their assets in their name. There's a lot of tax advantages with that as well, so they'll have much lower tax than they would in a managed fund situation. So it's really that transparency and visibility, the fact that it's their asset and they can take it anywhere they want, and the fact that they've got those tax advantages are the key advantages of that structure.
Excellent. I know with our clients that you've been looking after for the last 10 years within managed discretionary accounts. The decision making that you guys have made around those investments, I think, have stood them in great stead for taking advantage of market opportunities with the ability for you guys to make that decision quickly there and there. So I think that's another great benefit from it. So, Jamie, you mentioned managed funds earlier. What's the difference between an MDA and a managed fund, and what is it that makes a managed discretionary account more relevant for our clients than managed funds?
So the key difference between a managed fund and a managed discretionary account is really two factors. One, you don't get the transparency on the underlying investments. So with a managed discretionary account, you can see all your investments 24 hours a day, 7 days a week. You know exactly what we're doing with your funds. With the managed funds, they might give you the top 10 holdings. You have some vague idea about what's going on under underlying investments, but really you don't really know how it's gone until they report their performance at the end of the year or quarter. Then the second aspect is, I think there's a certain tax advantages with the managed discretionary account because it is the underlying client's assets. It's their assets. If any problems emerge, they just pick up those assets and move. But equally, they can really control the tax outcomes. Speaking to yourself, they might want to realise some gains or realise some losses. You can't do that with a managed fund. In fact, if you come in at the wrong point in time, you might inherit capital gains that someone else has earned, and you'll get hit with the tax consequences of that. So those tax differences are really significant. As well, I think there's just a lot of comfort with being able to see your underlying investment.
Yeah, absolutely. Well, Jamie, thank you very much for joining us today. I think all of our clients now have an even greater insight into who Dalton Nicol Reid are and why we here at FWO Chartered Accountants use Dalton Nicol Reid, and will continue to do so in the future. So thank you very much for joining us, and thank you.